So, John, as we sit here today, it's obviously been a very eventful year for banking. I mean, how much do you think that the COVID-19 pandemic has already redefined the way banks like yours go about their business?
It's a good question. I mean, obviously, we're working with many fewer people in an office environment, so we're having to deploy a lot more technology. We're working in a more hybrid fashion. So at Goldman Sachs, which I think is probably true across the industry, we work in teams. And so we're tending to work together, solving clients' problems. It's harder to do that when you're not physically together. And we believe a lot in the notion of apprenticeship and having younger generations of bankers, traders, wealth managers learn by doing and watching the more senior people. And that's harder to do in this environment. So it's definitely changing the way we're operating. It's also changing the way we're interacting with our clients.
Yeah.
It's changing the way we're transacting, right? So you're doing transactions where there's no physical diligence. There's no physical roadshow.
How does that even work when you're trying to buy something? Like, if you can't see the asset, you can't meet the people?
Well, what's remarkable to me is the buyers of securities and the buyers of companies are actually willing now to transact certainly without any traditional physical interaction, if not entirely zero physical interaction. So I don't think I would have predicted that in March. I thought that there would have been less transaction flow because people would have wanted more tangible experience, but it hasn't been the case. We've raised records amount of equity capital, records amount of debt capital. We've done a lot of M&A, not record amounts, but a lot of M&A, all basically virtual. And I'm not sure I would have predicted that, but that's kind of what we've seen. I think that will fundamentally change the way people transact going forward. I don't believe it means that you won't have physical diligence or CEOs won't want to get together if they're doing a merger. But a lot of the things that you used to do physically will now be done virtually and electronically, and that's probably going to be an efficiency gain for the industry.
Because I did speak to someone else about this, and they were saying that they thought this was going to be the death of the roadshow for most of the roadshows going forward. Is that too dramatic, do you think?
I tend in these periods not to want to be particularly dramatic about the death of this and we're never going to go back to doing that again, because I think it's generally not the case that things die. It's generally the case it just evolves a little bit around. But I definitely think you're going to have fewer roadshows. And I could see a scenario where a lot of primary capital gets raised without roadshows, where then once the company's public or the transaction is complete, the management team and the investors find ways to interact physically later. I could see that as a potential. There's no doubt we will have more video and more virtual interaction as part of the capital raising process. I think that's for sure.
And when you think about the new ways of working, and obviously you guys did migrate to a work from home model, it obviously worked because the earnings have been very good this year, but it sounds as if you don't see that as being a permanent shift, as if you would ideally like to have people back in the office.
Well, we're spending a lot of time on the future of work, which is quickly becoming an overused phrase, but we're spending a lot of time on when we come out of the pandemic and we're back into a more normalized world, what are we going to be doing and what are we learning from what we're doing now? We're now working with 20 or so % of our people in the office in New York. We were more at like 30 or so % in London before the lockdown. That's obviously come off from there appropriately. So it's not as if we have nobody in the office, but we're in a very hybrid work environment right now. The future of work to us will be probably more distributed workforce, probably less density in certain major city centers. It will probably include more electronics and technology than we would have had before the pandemic. I could imagine redesigning some of the office space where you have more convening areas and less of a traditional, kind of office environment. So there's a lot of things that I could imagine we will do. By the way, I think we have a lot of work to do on investing in training and development of our next generation talent, because we've done that very traditionally up to this point. I think we're going to have to start using some more technology tools in that regard. So there's a lot there that we're still working through, and we for sure don't have the answers, but we're working hard on it.
And how did the virtual internships go this summer?
So I'm proud of how we executed our summer internship program, which for Goldman Sachs is an enormously important program because we get a lot of our new hiring out of those internship programs. It's a good way for us to get to know the interns and for the interns to get to know the firm. And we gain a lot of knowledge and insight, and I think do a better job hiring by virtue of those programs. Much harder to do when nobody's physically in an office. We did, I think, a very good job delivering a program electronically. I have a little bit of a concern that we put on a very good show, and it went very well, but both for the interns and for us, we learned a little less about each other because we were more distant. So I'm not willing to suggest that that's the way of the future, but I think we learned a bunch about how we can get information and training to people that doesn't have to all be in an auditorium or some physical setting. But I think there's no substitute for some of the apprenticeship that has to happen physically, and I'm looking forward to getting more of that back in place over time.
And then I want to ask you about how the COVID pandemic affected the retail banking side as well, because obviously you guys have the online have Marcus, that's an online only bank. A lot of banks were effectively forced into online only models because people didn't want to go into branches. So does it change the way you think about the opportunity set for Marcus?
I would say that the pandemic has emboldened our view that the shift to digital banking and digital lots of other things, but since we're talking about banking, digital banking is now accelerated. And so for us, it actually is a good thing because our consumer ambitions are very, as you know, very digital. They're not legacy. And we're seeing that. We took in a lot more deposits over the course of this pandemic period. A lot of other people took in deposits too. There was more money in motion, but we definitely did well digitally, where more people, I think, are willing to bank on a digital basis than might have been before. And I think now you're going to see an acceleration of that. So I would expect this to be more of a tipping point in terms of how individuals bank. And I think more of that will become electronic, which for us will be a good thing because that's the way we've set up our business.
And does that then change how much investment you allocate to Marcus?
No, I don't think it changes the amount of investment. We're pretty methodical about the way we're investing our capital, and I would say that the way we've thought about it is the way we thought about it pre-pandemic. That just gives us more conviction that what we're doing is the right thing to be doing.
And you were doing a lot on the technology front for the securities division anyway. But how do you feel about the idea of like people who are trading, like working from home on and off over the medium term? Is that something that we're likely to see, or is trading really better off done on the premises if that's at all possible?
Well, I think as an industry, I think we proved to ourselves that we can actually risk manage and provision liquidity and capital more virtually. That wasn't a foregone conclusion in the beginning of March. I would tell you if you interviewed me or a bunch of my peers around the banking community, we were quite nervous about whether we could actually run a trading business with 98% of our people from home. The good news about this is we proved to ourselves as an industry we can do that. I don't think we want to live in that environment permanently because I think there is something to being together on a trading floor where information flow and knowledge and the speed of understanding what's happening is still a good thing when you're physically together. So I think it'll be a hybrid. I think we can certainly have more people that are operating remotely, but we'll have people physically too. So I think the hybrid world is the world we're heading into, where you'll have some people in, some people out. There might be rotations. And I think that we've learned that we can do that. Now the question is, can we manage a culture and can we train people while we're living in this kind of more disparate world?
So how do you do culture? I mean, are you having a virtual Christmas party this year, or what do you do for stuff like that?
Well, what we've tried to do over the last 8 or 9 months is communicate a lot more than we typically do, and we probably thought we communicated a lot before. I think we pride ourselves on being good communicators inside the firm, and I think we were good, but I don't think we were anywhere near as good as we need to be in the new world. And so we communicate a lot. We do a lot of town halls, virtual town halls. We use audio messaging to talk to our people. We do a lot of video and really try to exponentially increase the amount of communication so that we can get the messages out that we want to get out in terms of communicating what we think is happening. And we can get a lot of feedback from our employees as to what they see happening, what they're worried about, what their anxieties are, et cetera, particularly in a time of crisis. And I think the communication tools will become more contemporary and will become more often and more frequent and more real time.
Have you tried to do anything novel around social engagements, or trying to kind of recreate the after work bar or some kind of...
I've seen a lot of virtual cocktail events taking place around our firm. I'm sure the same in other firms where people are spread around their homes, but getting together and sharing time. And so we're not mandating any of that, but people are creative in the way they try to get together. I mean, the thing that I feel strongly about is humans like to be together. They like to interact together. They don't want to just be connected by technology. Technology should be a tool to allow for connection when it's hard to be together. But at the end of the day, I think the human condition is we like to be socially connected and otherwise connected. And so I don't think when we get to the other side of this, that's going to change. I think people are going to want to be in some form of connectivity, whether it's socially or otherwise. So I'm not yet willing to predict that this is all going to be, we go to our, corners and we just communicate over a video connection.
Yeah, I can see that all right. But when you think about how things are changing, tech has obviously been central to a lot of this. How much of this tech was already being developed anyway, and how much of this would have come? It just might have taken a bit longer, do you think? Can we think about
the industry, it's a good question. The industry made a significant amount of investment over the last decade in building technology capability all over our businesses, whether it was how we provision liquidity in markets businesses, particularly in equities, which became very electronified over the last decade, and increasingly in the fixed income markets. So there's been a lot of platforming and investment in technology to deliver better, faster, cheaper execution. And I think you saw a lot of that come to roost in terms of what happened during the pandemic, where you could actually have people spread out and we could still deliver the execution capability. Consumer, good example. Everybody's trying to build more digital connectivity in consumer banking, and I think those investments have been made and will continue to be made. So I think what we saw in the pandemic is the investments that were made kept the system pretty safe and allowed for that to work in what was a pretty dangerous time. And I think now you'll see more investment and that acceleration of that investment, I would expect to be even greater as people realize that technology is the way of the future. We're not transacting the way we used to transact, and this acceleration is only making that more apparent.
Like, how much harder would this have been if it happened a decade ago?
Very hard.
Impossible, or?
I'm not smart enough to know if it was impossible, but it would have been different. It would have been different. We would have had less of an ability to prosecute the volume of transactions electronically that we were able to do. Or provision people with technology to go home and actually stand up a trading capability from their living room. I shudder to think what it would have been like 10 years ago. So I think we're fortunate the pandemic happened after the technology investment was made.
And are there things that you wish you had had during the last lockdown that you're actively building in case there's a similar situation again?
Well, I think better MIS systems, better ability to really understand what's happening on a real-time basis all over your business. I think. Sorry,
what are MIS systems?
Management information systems. So the ability to understand what's happening in different parts of the business on a real-time basis, where you can, with elevated volumes, sometimes you have a hard time really seeing what's really going on. And one of the things that we experience that I think about a lot is the system was overloaded for that period of time in March and early April, and settlement was taking longer.
Yeah.
So there were operational settlement delays, which on the one hand, we worked our way through as an industry. On the other hand, it made it harder to understand where your liquidity was because you didn't know whether that settlement was happening, not happening 4 days later. Yeah. And so I think, the combination of getting that system to be faster, cleaner, more digital, and having more management information systems and ability to understand what's happening on a real-time basis is what I would, suggest we as an industry need to continue to invest in.
And how much does the economic fallout from the pandemic impact the way banks do business and the role, I guess the kind of broader role for banks in the world?
Well, I think our clients are struggling and suffering in many respects, so they need us more. They certainly needed us more in March, April, and May when it was unclear what the shape of the economy was going to be. For Goldman Sachs, we tend to be more of an institutional firm serving larger companies. We don't have a small business platform as others do, but certainly if you have a small business lending platform in scale, this was a period where you were mission critical to your clients. But even with the larger companies in that period, there was a lot of emergency liquidity. There was a lot of need for our services and other peer firms like ours. And so, I think it just makes you more aware of the critical role you play in the system and the critical role you play for your clients to be there when they really need capital, liquidity, advice, perspective on what's going on in the world in a foggier, more uncertain time.
And is this a time, do you think, when banks are really expected to even risk taking losses on their own books for the greater good, where you have to kind of put the country first or put the economy first and the bank second almost?
Well, I have to say, I thought a lot about this. I think the industry performed well during that period of elevated volatility and the need to provision, I'd say mostly credit, to our clients, whether they were small businesses in some cases or large companies in other cases. For us, it would have tended to be larger companies. We provisioned a lot of credit. We allowed our balance sheets to be utilized to transmit the liquidity that was coming from the central banks into the system. And that's the way the system is supposed to work. And I think we as an industry stood up and did a good job. We navigated the regulatory constraints properly. We grew our balance sheets, but we kept an eye on our capital, and we did a good job, I think, getting ourselves to a place where we could navigate our capital requirements, but still grow balance sheet and provision credit and liquidity in the system. So I think the system worked well. I think the banks performed well. I think there was good coordination with the central banks. And I think when you look back on it as maybe different from the financial crisis, this was a period where the banks and the central banks were forces for good in terms of making sure that credit got to the places where it was supposed to get. I'm sure it wasn't perfect. We'll look back and find areas where mistakes were made. But broadly speaking, I think part of why the economies have recovered is that architecture of central bank policy and banks as intermediaries generally worked.
And when you think about the needs of the economy going forward, and as you say, the small businesses, that's a big area. I know you guys have the 10,000 small businesses project which you support, but is there an argument for Goldman getting into actual lending to small businesses to support the recovery?
I appreciate the question, and I'm glad you raised 10,000 small businesses, which for us is a really important program, which originated in the United States, and we're now launching in both France and England, and we're very excited about that. The program is really about educating small business owners and equipping them with the tools to run their businesses more effectively. So it's a pretty simple but important concept. In the United States, we've graduated around 10,000 small business owners, and we've had extraordinarily good success in having them both hire more people and grow their revenues and their businesses, which was really the fundamental principle of making them more successful. And we're now going to go ahead and try to start doing that in Europe, and we're very excited about the prospect of really growing this platform in Europe and making making a real difference for small business owners across Europe. I think for Goldman Sachs, commercially, you will see us start to edge our way into small business activities. Our consumer platform gives us now an ability to interact with small businesses from a digital consumer standpoint. Our transaction banking platform, likewise, is a platform that allows for payments for corporations. Yeah. Doesn't have to just be for large corporations. We could certainly allow that to be available to small corporations or small businesses. And so you'll see us start to look for ways to use both those platforms to serve small businesses over time.
I think you're doing a little bit through the Amazon partnership, which I'd actually forgotten about.
We do. We have a partnership with Amazon, which we're very excited about, which again is an example of using platforms that we have and embedding them in other people's ecosystems. So Amazon obviously has a relationship with lots of small businesses and individual consumers. We have less of that in our firm, but we have platforms and capabilities. And so that partnership is really about marrying our platform and capabilities with their in their ecosystem and allowing us to find ways to serve more customers.
And when you think about the kind of things that we saw playing out in the US over the summer from a more general perspective, so there was a lot of social unrest around inequality at various levels. Do you think that banks should be assuming a leadership position from a kind of a thought leadership perspective where they are kind of like pronouncing on the need for America to do this and this, or should banks really just focus on doing their business?
Well, I think it doesn't have to be binary. We could do both. We could provision capital and credit to our clients and do a good job of that, and we could advocate for policies that are good policies to make the world a better place, not to be too dramatic about it. And so I think there's no reason why we can't do both. Our primary job is to do a good job stewarding our capital and provisioning it out to our clients intelligently, but advocating for policies that help small business or larger companies, as the case may be, in smart ways is something that we always think about and we'll continue to think about.
One of the arguments you do hear, though, is would it benefit banks like Goldman if the world were a better place? Like, is there an argument that actually banks like yours benefit from inequality because you guys serve the people who are at the top of the food chain, so you do well when they do well? Well,
I have to say I don't agree with that. I think we probably don't as an industry do a great job describing why doing what we do is a good thing for the broader economy and for the broader population at large. But banks are the bloodstream of providing capital to the world, right? So whether you work in a factory or you drive an Uber, in some way, shape, or form, that business, that employment opportunity has to be financed by some entity that is allowing that to happen. And so banks provide a lot of capital in the economy to allow the economy to function, and a lot of risk capital to allow the economy to grow, to allow companies to form, to allow investments to be made, to allow innovation to happen. And without the provision of capital, risk capital, that doesn't happen. So I think there's a transmission mechanism that maybe we as an industry don't do a great job describing. But I know people think we serve the wealthy or the elite. We serve corporations, we serve individuals, we serve institutions, and people work at those places, and the employment is important. That's kind of what makes the economies go. So I think we're supportive of all that, and I think we don't maybe do as good a job as an industry describing that, but I certainly believe that we serve a critical and important function in the world.
And part of what banks do now is they help money to go around the world. They help the kind of global supply chain for finance. If we see COVID-19 and some of the geopolitical tensions making like national borders a thing and kind of re-erecting some national borders, how does that impact the way you think about your business?
Yeah, it's a good question. I worry a lot about one of the maybe unintended consequences of this pandemic being a sort of reduction in the globalism of finance, trade, and economic growth becomes much more of a nationalistic concept. That would not be good for the banking system, I don't believe, because the banks, have tended to operate very globally. I don't think it'd be good for economies, and I don't think it'd be good for the world. But it's certainly a risk. And I think the rise of nationalism, the rise of populism, those tend to be very nationalistic, have nationalistic tendencies. And so I think we're certainly in a period where there's more risk that could be more of a wave, and we'll have to deal with that.
And how would it impact the culture of the bank if you weren't able to easily move people between like London, Hong Kong, New York, and kind of get your people across different geographies? For Goldman Sachs, we operate a very global business, and we, to your point, move people around. The pandemic's made that harder, undoubtedly. But if you look at the people that lead the different businesses in the firm, they've typically had many jobs and often in multiple geographies. We think that's important for our people to understand the whole of the firm, and for them to understand the way businesses operate outside of their home country, to get a better sense for the global nature of the economy at large and of our businesses. It makes people better. It makes them more intelligent. They understand culture. They understand the geopolitics. It's important to be a more global citizen. And so anything that restricts that for us would make our lives harder, and I think would make our firm tougher to manage, and fundamentally would make our business tougher. And how hard has it been this year to move people across the world, or has it just not happened? Yeah, I mean it's all been impossible given the I think rightly so, given the quarantining and the restrictions. So this is not a period where we're moving people around the world. That's an example where virtual connectivity is in place of physical connectivity. So I feel less connected to my colleagues in Europe and Asia than I typically do, because I'm over there all the time, typically. Much harder to feel connected when I haven't been able to share a meal or have a laugh in person over some issue that we're wrestling with. It's much harder to do that over a video technology, but we're making the best of it we can. I guess we're hoping this is a temporary state rather than a permanent one. I don't believe it's a permanent stage. We'll get through this. We'll get to the other side. I certainly expect to be in Hong Kong and Beijing and London and Frankfurt, at some point in the near future. We'll see how long that takes, but I don't believe this is permanent. As I said, human condition, people want to be together. We have to do it safely. We have to do it intelligently, but I don't think we're going to lose that underlying human condition. So I'm going to ask you to get your crystal ball out now. Not onto politics yet, but if you think about Goldman in 10 years' time, how different do you think, first of all, Goldman Sachs will look, and then how do you think that the banking industry will look? We will be a more diversified firm. We will have a very large, hopefully successful corporate and investment banking business, which is kind of sales, trading, and investment banking. That's a phenomenal business for us, and we intend to make it even better and stronger over time. So that business, I would expect, would be bigger, stronger, more global, hopefully. And then you'll see us have bigger, more diversified businesses in asset management, in transaction banking, in the consumer arena, in wealth management,
And so the firm will be more of a diversified firm over the next 10 years, for sure, if we do our job properly. And I think we will be much more technology-centric in the way we transact with our clients and the way we serve our clients. So we will have more businesses that operate in platforms where the transactional activity is happening in a more technology-centric way than it is in a human-centric way. Not exclusively. I don't yet believe mergers and acquisitions are going to happen through bots.
Like robots are, yeah.
But I certainly think a lot of the fixed income trading and equity trading that you now see maybe in a more physical form will be more digital in 10 years. I think it's hard to imagine it won't be. A lot of the consumer activity will be more digital in 10 years. When you think about how you transact, a lot of it will be done on a phone.
That sounds great from an earnings perspective, but from a people perspective, does that mean a lot fewer people?
Well, I think for all of us as an industry, we're going to have to train existing people and hire new people that are able to live in that world and be effective in that world. I don't think it means we're not going to have people. I just think it means you're going to have to interact with technology in a different way. You're going to have more of an understanding and a comfort level with that technology and how you make it work for you in the context of that, whatever the business platform is. So I'm not a believer that this means that people get wiped off the face of the earth. I just think it means we're going to have new skills, people that are going to be more equipped to handle a world like that.
Yeah, I mean, I'm not talking about killing all the people, but presumably if you have more tech, you can have fewer people for the same level of activity. Otherwise, what's the point?
In some cases, yes. In other cases, the technology is just a tool to allow people to do their jobs better. So we use a lot of technology in M&A. It doesn't mean we have fewer M&A bankers. We just use the technology effectively to allow them to have more data at their disposal, more of an ability to be smarter in the context of how a transaction, should evolve, what the valuation ought to be, what the historical values have been. So there's the ability to use data. I mean, ultimately, data is probably the single most powerful tool that firms like ours can use if we use it intelligently. It doesn't mean that you don't need a lot of people to interpret the data and analyze the data and use the data intelligent with some human judgment. So I think it's going to be more of a shared infrastructure. Undoubtedly, there'll be areas where you operate with fewer people and more technology. It's hard to argue with that, but I don't think it's going to be as dramatic as maybe some would suggest.
And we talked a bit about cities earlier. Do you think that the main office will still be here in New York, or can you see a scenario where you wouldn't actually have the head office in Manhattan, where it could be somewhere different, somewhere cheaper?
Well, first of all, I'm a big believer in cities. But it kind of goes along with my view that the human condition is people like to congregate and be together. And there's still something about being in cities where you have access to culture, sports, employment, parks, et cetera, where you can actually live a life that seems a very full life. So I believe cities are still going to be important in the future. It doesn't mean that the cities that are important today must be the cities that are important 10 years from now. Somebody reminded me in the United States that Detroit, not very long ago, maybe 30, 40, 50 years ago, was one of the most important cities in America, and then went through a period where it really deteriorated, and now we're hopefully seeing it start to reemerge again. So it doesn't mean that any of these cities have a God-given right to be the most important cities in the world, but I think cities will continue to be important. Our headquarters in New York City, I don't see any reason why that will change. But I'm a believer in cities, but cities have to compete, right? I mean, one of the great things about the world is it's competitive. So you have to compete. You compete on taxes, you compete on regulation, you compete on quality of life, you compete on many areas of what makes a city a great city, and that will continue to be the case.
I think a lot of our audience are watching this from Europe. How do you see the competition among European cities in a post-Brexit world? So you have like London, Paris, Frankfurt, Dublin. Big fan of Dublin?
Yeah, Dublin's great. We have a business that is a very pan-European business. So we obviously have a big locus in London, but we've got a big office and growing in Frankfurt. We've got offices in Paris, Madrid, Milan.
Dublin is feeling somewhat left out.
Dublin is not as big an office for us, but we can talk about that over time. But our business is distributed, right? We have clients all over the world, and there's talent all over the world. So we're not going to run a business where we have a few offices and we sort of commute everywhere. We're going to run a business that is much more distributed. We do now and will continue in the future. It might be even more distributed over time, not less. Europe's an important business for us. I lived there for 4 years. I lived in London. One of the things I learned living in London is the importance of the continent. right? So you can be very London-centric sometimes and forget that there is an enormous population base, corporate base, economy
Germany,
base
Italy,
on the continent. And what we've learned, I think, over the years is it's really important to have a London operation and a UK operation, and it's really important to have a continental operation. And I think that what we're trying to run is a balanced platform in Europe. Brexit obviously, creates different complexities, and you move people around to deal with that, but it's not as dramatic, I think, as the press sometimes makes it out to be. We haven't moved that many people. We're still going to have a big business in Europe, in London. We're going to have a big business on the continent, and we're going to run that business in a very integrated fashion. We'll abide by the rules. We'll navigate it accordingly, but we're still going to have a business that's really very UK-oriented and very pan-European oriented.
Okay, I'm going to ask you to do an even bigger crystal ball now. We're sitting here on Thursday. The outcome of the US presidential and other elections is still unclear, but at this stage, do you see it being a game changer for banking in the US, however this thing plays out?
Well, I think as we sit here today waiting for the final results of the election, I would observe, and the market's kind of telling you this in terms of the way the market's traded in the aftermath so far of the election, that this is an election where it's more going to be oscillating around the center than it is going to be more of an extreme set of outcomes, most likely. If you have a Republican Senate or a Senate that's more deadlocked around 50-50, and you have a Democratic president, you have something that looks more like divided government. And if you look at the history of the United States, divided government often can be the best outcome for economic growth, where you don't have things that go too far to either extreme. You have things that are more in the center. And I think the U.S. system in many ways was set up to operate in that arena. So I would observe at the moment, although it's not over yet and we've got to wait and see, that it probably means that there's a more centrist set of outcomes, and you don't have particularly extreme outcomes on either side.
So I think that's probably a good note to leave it on, John. Thank you very much for your time.
Appreciate the time, Laura. Thank you for having me.